Hey everybody, this is Jim at SP500chart.com. It's about 4:15 on April 24th, 2014, and we're going to take a quick look at the S&P 500 chart as we do after every day's close. After I remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. And as you would suspect, we're going to be able to make pretty quick work of today's chart. Just a couple things to note, and it's nothing new. That's why we're going to be able to do this pretty quickly. Let me get rid of my moving average line right there. Essentially, we knew that we broke this little steeply rising channel at the beginning of trading yesterday, so don't need to mention that again. We're still underneath that line. We will be underneath this line in all likelihood from now till eternity, because that line just goes way up too fast. And we doubtful we will ever catch up to it. Maybe, but in the long run, that line goes off into the stratosphere where it doesn't even matter if it's resistance, because it's so high, we're probably not even going to test it. Does that make sense? It's like if you have like for example, this line right here. If we drew a trend line right here, and we said, okay, we got this steeply descending trend line, and you say, well, will it ever get back tested? Well, it actually did get back tested within just a couple hours after it broke to the upside. But looking at this line and where it goes from this point on, we'll never test that line again, because it's going down at too steep a pitch. I believe this channel is going up at too steep a pitch, and we know that up is harder to go than down, at least quickly. By the way, they say that the markets spend about 2/3 of their time going up and about 1/3 of their time going down. So if you look at it, this chart, you sort of makes sense. Here we go up for 6 days, and then we go down for 2 days. Then we go up for 2 days, and we go down for 2 days, then we go up for 6 days, and you see what I'm saying? People tend to panic more when they sell. People sell out of panic. That's swift, and it's very quick. So anyway, with all of that said, we stayed today, for the most part, between our 1872 and our 1884 lines. We dipped down underneath 1872 momentarily, and I think I know why that happened. If we zoom in and look at a 3-minute chart, I think it's pretty clear. You know, we had this little triangle pattern yesterday that I mentioned, and if you'll recall, I said I wasn't sure whether this was the correct interpretation, because all of those little bottoms line up there, or if this was. And basically what happened was we opened today actually over where this triangle would have had a target anyway. This triangle would have given us a target of about 1882 had it just broken out, but we opened the market at about 1882, then had a reactive move that was really swift. Came back to this triangle, went through it, and then came back up, and then settled above it. So I think that's kind of interesting. If you don't mind me saying, it's almost as if we pulled the rubber band back right here, and then we let go of it, and it came boom, 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 and then it bounced back, boom, 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 and then we bounced around a little bit. And we ended the day in slightly positive territory. If we want to look at this chart and try to get something to gain an advantage from, you know, I don't know that there's much more going on here other than these two lines. And remember, if we break through this line with technical significance, well, It goes without saying, because in order for us to break through this line with technical significance, we almost get to 1850 anyway. But you know what I was going to say is that we have this area that is given a good bit of support, with the exception of these 3 days back in the middle of April. If we come back to this at some point, I would expect probably some more support down here. This area, 1840 to 1850, has been running pretty good interference with moves, both when it's tested from as support from above, or back in January and February when it was tested as resistance from below. So this is a kind of a classical situation where you see that what used to be resistance tends to turn into support. Again, we did break down underneath that just a little bit for 3 days in the middle of April, but now we're back above this. And it looks sort of, to my eye, like we're trying to put a little pressure on this 1884 line. Haven't been able to break above it yet, but it sure looks like there's some pressure building here. One more thing I'll show you real quick, and then really I don't think I need to say much more. It's interesting. You know, there have been times when I would take a line that we know is pretty good, and then I would snap it, make a copy and paste it to another spot on the chart. I did it with this line right here. There was a time when this lower line did not exist, so I said, well, let's make a copy, create a parallel line, and throw it down there, and look how that lines up with where that low is. This is a little different, but I'm going to take this line, create a parallel line, and if we move it right here, interesting to note that as we look at where we traded today, we came down hard to this area. There's our parallel line, and then we came back to it. This line continued to provide some support going forward. I mentioned that mostly as a curiosity. And finally, one more thing I want to mention, just to point it out, not because I think it has long-lasting technical significance, because I don't think it does, but if you look at this little triangle we identified yesterday, and when you look at after we settled down after this gap here, and that gap, by the way, was back up to that 1884 area again. Let me move that. That line got up to 1886 somehow. It's supposed to be at 1884. But anyway, if you look at where we bounced when we finally sort of settled down, it was right at the apex of this triangle. So basically, I think this was a premature breakout. We then had a reactive move that took us back through here. Again, think in terms of a spring being pulled upwards at the very open, and then it snaps back, found support, found the place where it would oscillate down to, then started to bounce around a little bit more, and finally kind of settled down throughout the latter part of the day, and found this line, at least for now, as support. So let's just see what happens going forward. The same thing holds. 1884, we get a close over 1900. I think we're good for the 1950s. Finally, just one more thing we could do. It really doesn't make much difference, to be honest with you here, because this line really is very close to this one anyway. But, you know, we do have a couple of tops. I'm going to disregard this little momentary thing here, but if we look at this top that we saw in the late morning or almost midday, and then you snap a line across this and the top we had 2 days ago, maybe that's a line that gives us a little bit of a clue that if we get over that, but again, we still got 1884 to deal with, so this is really kind of redundant. But Guys, just be patient. One of these days, we're going to get out of this range. We're going to either go up to 1950, or we're going to come down to the 1700s. Until we do it, it's frankly sort of anybody's guess. I'm just a little bit inclined to give the market the benefit of the doubt, because that has always been, at least for the last 5 years, that's been the way it should have been played. So I'm going to be of that mindset, and let's just see what happens tomorrow, see if we get a little bit of clarity. So guys, thanks for watching. One thing it might be said that it's a little interesting is the fact that the market really had a pretty decent day today, despite the fact that there was some disappointment in the jobless claims. So for what that's worth. So thank you for watching. I really do appreciate your time, and I especially appreciate your support. Take care.